Welcome to another episode of Spy Trader. I'm your host, Chuck Finster, your guide to the lands of the S&P 500. The current time is 6 a.m. on August 2nd, 2024, and we've brewed up some fresh financial news and analysis for all you early birds, trading, or just trying to stay informed. Let's dive right in, shall we? First, let's catch up on some key news headlines that are making waves today. Tyson Foods is gearing up to announce its Q3 earnings on August 5th before the market opens. There's a lot riding on this, as analysts are expecting earnings of 65 cents per share, a significant jump from last year's of 50 cents. This anticipation is paired with a projected quarterly revenue of $13.21 billion. Now, for those who appreciate a consistent paycheck no matter what the market's doing, Tyson remains an interesting dividend play. The current annual dividend yield stands at 3.23%, with a quarterly dividend amount set at 49 cents per share. If you're eyeing extra side income, you can think about dividend reliance. Let's say you want to make $500 a month. You'd need to invest around $185,986, which translates to about 3,061 shares. Meanwhile, for a smaller target of $100 per month, that would be around $37,185, or 612 shares. Tyson closed yesterday at 60.76 cents, reflecting a slight decrease of 0.2%. All right, now let's move to what's driving market sentiment today. Tyson Foods is getting a neutral rating from Bank of America, with a slight cut in their price target from $62 to $60. Why is this important? Ratings and price targets from major banks can influence how retail and institutional investors allocate their funds. A neutral rating might suggest to some investors to hold or even rethink their positions. The question that's on everyone's mind, how does this affect the S&P 500? Tyson is a part of the broader S&P 500 index, and its earnings can ripple through investor sentiment. Consumer staples, where Tyson belongs, often act as defensive plays during market volatility. So keep your eyes peeled, because some heavy earnings in this sector could either calm or upset the broader index dynamics. Now, here's my 2 cents on the trading scene and what you might want to consider. Given the approaching earnings report and the current neutral rating, it may be wise to stay cautious. If you're holding TSN for dividends, you'll likely be okay, but monitor this closely, as a significant miss on earnings forecasts could introduce some unwanted volatility. Diversify if you haven't yet, because the S&P 500 is a big ocean, and Tyson is just one whale in it. For those thinking of jumping into the Tyson stock pool, consider waiting until after the earnings call. This could give you more clarity and perhaps a better entry point, especially if there's a surprise deviation from expected results. If the company beats expectations, we may see a nice uptick, rewarding those who have a bit more risk tolerance. How do you calm a wild stockbroker? Talk about a stable market. Ha! Easier said than done, right? But really, understanding the nuances behind these numbers can make the market seem a lot less wild. Remember, earnings season can be like riding a roller coaster, exciting, but also a bit nerve-wracking. Whatever you decide to do, trade smart, stay informed, and keep your emotions in check. That's it for this episode of Spy Trader. Thank you for tuning in, and as always, may the trades be ever in your favor. Make sure to hit that subscribe button and catch our next episode for more insights and updates. Until next time, keep your strategy tight and your spirits high. This is Chuck Finster, signing off.